Hello and welcome to a very special edition of Newsmakers. The Newsmaker today is the Bank of International Settlements. It's actually an international organization which is the central bank of all central banks, a kind of a knowledge institution which coordinates monetary policy, financial stability, and its new baby is the Finternet, which is trying international payments to get smoother. But more on that later. My guest is the chief of the BIS, Dr. Agustin Carstens.
Hello, Latha. A pleasure to be in your program.
Thank you very much. Sir, a word about you. Agustin Carstens is perhaps the best central banker the world can have to head the BIS. He has been the central banker, the governor of the Bank of Mexico, the finance minister of Mexico. He has been managing director at the IMF. He has been member of the Financial Stability Board, continues to be, and of course is heading the BIS since 2017. So the best person from whom we can get an idea of central banking, monetary policy and financial stability. Dr. Carstens, my first question is not going to be on the economy or on the interesting payment system that you're trying to put in place, but a more theoretical question. Flexible inflation targeting, which India embarked on just 9 years ago, we think it's very successful. But within India, there are people who are doubting whether inflation targeting is a good idea because food is not something the RBI can control, and food is a large part of India's index. So there are opposing views. What's your view on inflation targeting?
Well, first of all, I think it has been a tremendously successful methodology and strategy to follow to stabilize inflation. I mean, I think that if you compare the world economy from the, 40, 50 years ago to today, one of the key aspects is the absence of relatively high inflation in many countries. And this was achieved primarily because of inflation targeting. Inflation targeting basically means, in a very simple way so that people understand, is for the central bank to say, I have a set of instruments, I will use the instruments in a way so that I can assure you that inflation will not be higher than X%, or it will be contained in a certain range. Flexible, it is flexible sometimes from the point of view of the flexibility of the use of the instruments, but also sometimes it is flexible from the fact that to have a very specific point inflation target is difficult and it's risky because, as you well mentioned, there are many prices that do not depend on monetary policy. But what is really important is that the development of those prices can affect inflationary expectations, and therefore it can contaminate the rest of the prices in the economy. Therefore, the central bank cannot ignore these prices, in the case of India, for example, food, because it affects expectations. And at the same time, inflation expectation relies on the trust that people have on the scheme. Now, a scheme would be not very good if the central bank says, I will mind these prices, but not these other prices. The person in the street will say, well, that doesn't make sense to me because I face all the prices, not only the one you choose. That's why it has to be integrated, and I think it makes sense and it works.
The Reserve Bank of India is a full-service central bank.
Absolutely.
I'll come to that in a minute. They are celebrating 90 years, and I will need your comment. But the more important question is the financial stability of the world or of global markets at this point in time. We have seen a lot of exuberance in equity markets. In the US, we've had those magnificent IT stocks. We've had a roaring equity market in India as well. At this juncture, are you worried about financial stability? Any red flags you see hidden in plain sight?
Well, there is a sector in the financial system where we don't have a very good sight, a very good perspective, and that is what is called the non-bank financial intermediation sector. Basically, here we're talking about activities like hedge funds, like private equity, private banking, sometimes even insurance, asset management, and so on. Many of these activities are not regulated or they are not supervised fully, but that doesn't mean that they don't take sometimes heavy risks and that at some point those risks can materialize. In particular, the concern is that sometimes maturity mismatches are present, yes, and at the same time there can be over-leveraging. And whenever you have dislocations in the markets or economic shocks, those risks can materialize. Now, they could have at some point a systemic impact because the non-bank financial intermediation is not fully dislocated from the banking system. The banking system is the one that we care the most because usually that's the dominant, as it is the case in India. Yes. And it also is because it has the most access to the population. But oftentimes the banking system provides financing to the non-bank financial intermediation. And if you have a major problem in non-financial intermediation, could contaminate the banking intermediation. So we need to have a comprehensive view and try to use our instruments to guarantee financial stability in all scenarios.
Let me ask you the more optimistic question on economic growth. It does look, the last number we got from the United States was 3% GDP growth for the just ended quarter. Do you think that risks of recession in the world are actually overblown and we are quite likely to have a soft landing?
Well, let me again also follow you with a positive note. I think, yes, we have been faring better than what we anticipated. I think that the coordinated monetary tightening in the world to address a global inflation spur has had not as important impact on economic growth. Now, at the same time, I have to say there is a lot of heterogeneity in the world. Yes. I mean, I think one very remarkable case is, of course, India, that is probably the highest growing economy in the world. The U.S. is also doing extremely well. Many emerging markets are doing well, but you cannot say the same of some notable economies in the world. Europe is in a soft patch, not in recession, but growing relatively low rates. And then we have the second largest economy in the world, China, that is really going through difficult times. So all in all, we can feel optimistic, but there are some areas or some parts of the world where growth has been, I would say, substandard.
Mm-hmm. No, I agree that there will be, economies moving in different speeds, but overall you don't see risks like the 2008 risks which can kind of impact markets. Nothing like that is on the cards.
No, not at all. I mean, I think what has happened in this post-COVID period is the collective action of the central banks was very decisive, was opportune, and it really had a very solid impact on inflation, and it's being brought under control relatively well. I think some of the factors that generated inflation turned out to be transitory, and that helped, but the monetary policy actions implemented also played a very important role. There is inflation expectations are relatively stable, interest rates are starting to come down, and that will support growth. At the same time, usually when you have a major shock or crisis, you suffer also of financial instability. And in this case, we didn't suffer financial instability. And that is because we entered this post-COVID period with a very strong financial system.
Yes.
And that tells us that the efforts that we implemented after the GFC are paying returns in terms of stability.
Okay. That's good to hear. If one of the best central bankers doesn't see red flags, that's a positive. You alluded to India in passing. Can you elaborate? Something's going right here. We are having a better rate of growth, a 7% rate of growth for the past few years. Any further comments? What seems to be going right here?
Well, I think many things are going right here. I mean, I think it's very refreshing to come to a country where you see very positive indices right and left. I mean, I think that you have followed a balanced process of development from a macro point of view. You have had a good fiscal policy from the point of view, yes, it's in deficit and so on and so forth, but it is moderated, but also the quality of expenditure is adequate. So just coming here, you see the development of infrastructure, and infrastructure definitely will support the economic growth. You have inflation under control. Financial intermediation is working well. And then you see also major efforts in different regions in the economy, trying to, from a structural point of view, make the Indian economy more productive, more efficient. And I think that is being reflected in rate growth. And in that way also you take advantage of the fact that you have a young population, a thriving population, and at the end that materializes in terms of economic growth.